Everybody hear me? Yep, perfect. I think those might be the nicest words anybody's ever said about me. So thank you very much, Steve Kennard. And also, and wanted to give a thank you to Steve for stepping up, moderating, just a heck of a guy with the TBC, now leads the AI Innovation Council, and he's done a tremendous job in putting, in putting this market forward for everybody, and I cannot thank Steve enough for moderating the stage for us and being part of it from the very beginning. So, and again, thank you guys for joining us here, Matt, Eric, just with Luxor, HUD 8, incredible companies. You guys are doing incredible things. So let's get into it. Let's get into it. So, first question, I think we have. We'll start with Eric. HUD 8 has had tremendous growth over the past several years. You guys have really been one of the leaders in digital infrastructure for the past 3, 4, 5 years. What is it that in your scope and your role, and maybe you could share a little bit about kind of what your focus is there at HUD 8. What are you guys kind of looking at, your diligence process, while you're making kind of a capital commitment to a location?
Yeah, it's a great question. Thank you, Scooter. Thank you, Matt, for having me. I oversee all of our operating assets at HUD 8. And on your point about diligencing new projects, what do we look for? I think there's 3 key areas that HUD 8 really focuses on. It's the commercial agreements, it's the infrastructure that's in the ground or we're planning to put in the ground, and the third thing is the people. Do we have the people in the area that can support this infrastructure and the agreements that we commit to? On the first point, these infrastructure agreements, we're talking about power purchase agreements, rep agreements, queasy agreements, our land agreements. What do we focus on the most? Our number one cost in this space is power. So we're going to be looking at the PPA and the rep agreements, and we're going to be scrutinizing those the most. For the rep agreements, we're looking at specific things that will help HUD 8 build value long term. And what does that mean? HUD 8 has grown a lot. We have a big stack that we can use and deploy throughout projects. But one thing that we don't want to lock up is our cash. Having cash locked up is a detriment to project finance, and it's a really big hurdle that we try to avoid. Gone are the days where loads are stable. It's a lot more flexible in nature, and we are looking for these rep agreements to reflect that. We don't want to be locked into high collateral costs, a permission to use ancillary services. As much as I would love the break even for Bitcoin miners to be $1,000 a megawatt hour, we are just not there yet. So having this thought process, if you're a rep behind, okay, what is the actual load profile behind these assets? And how can we as a rep build around our customers' true purpose and true operating profile? That is what we are looking for specifically in these rep agreements.
Well, thanks for sharing that. I think that's a perfect opportunity, right? So Matt, how are you guys, if HUD 8 and Eric are the end users, you guys have a tremendous technology stack that you guys have been able to deploy over many locations for quite a while. What are, from a rep's perspective, right? We have the end user's perspective of what they need. There's another side to every deal, right? So counterparties have to be collaborative and work together to have any transactional liquidity and to have any reliability of what those contracts are ultimately going to mean and how you're going to grow your business. So from a rep's perspective, how are you guys looking at the end user, and what are the things that you guys can provide?
Yeah, I think, from a rep perspective, Eric hit on a lot of the pain points, right? And it all comes down to like, how do you get the lowest possible hash cost, right? And from a rep, you have, from Eric's perspective, he's probably looking for a low adder. He's looking for duration flexibility. He's looking for, the lowest deposit or collateral requirements they can have, flexibility on billing. And maybe instead of USD as deposit, he's looking for BTC because they're sitting on a huge stack of BTC that they could use for deposit instead of USD. So, for us as Luxor, we have the benefit of interacting with miners on several different business lines. So we have the pool, we have firmware, we do ASIC brokerage. My team runs the derivatives. At every single touch point, you realize that capital is the big issue, right? So like as a rep, you come in and say, all right, we can provide, and we are a rep now in ERCOT, just so everyone knows. Our thing is, all right, we can offer a very low adder. We can get flexibility on your billing. We can go to daily payments. We are going to be able to accept Bitcoin as collateral. So basically, for us, it was just listening to what people's problems are and saying, hey, like we're a rep now. We actually have all these other services as well. So, while you're interacting with us on several different business lines, we can get you, lower price points and make it so you just have one touch point with Luxor. So now, if you're looking at your Luxor dashboard and you see, here's your mining rewards on our pool, and it's right next to what your power bill is, and we'll do netting against the two, just makes it a much easier experience for the person seeking a rep.
Let's stay on that. That's pretty huge. So from Eric, from your perspective, what impact does that have on a business like Hut 8 that is, again, 700 megawatts? I mean, that's a massive amount of capital flow every single day changing hands. So what does that mean for you guys?
Yeah, we have real world examples of this in our current portfolio. We are contracted with some legacy partners where they are in the times of, this is your load, this is the forward of the market, and this is how many megawatt hours we expect you to consume, and I need $15 million from you. I don't care if you say you're not going over $100 a megawatt hour. We're not going to take the risk. And I think that's a big loss opportunity on both sides because one, we don't want to post $15 million when we can use that and build more sophisticated cooling systems, for example. Or from their side, it's not a customer first approach where they're really digging into the details on operational profiles for their customers. So I'd rather not spend $15 million locked up in a escrow account over a 10, 15-year period, and instead I'd rather use part of our Bitcoin stack and put that to use than just cash.
Yeah, and I think we could agree and understand, right? So those deposits, those collateral requirements, it's just a measurement of risk, right? And I think every counterparty has the right and the obligation to be able to cover the risk on the transaction. So that's pretty innovative, right? So BTC as collateral, you guys have done this, Matt, before with some of your other business lines, but why have you made that decision to enter that into the rep space?
I mean, it's pretty easy. We're already doing this for our derivatives business. Like we're a mining pool. Like everything we do is transacted in Bitcoin, right? And like our derivative products are denominated in Bitcoin. So understanding how to, model out the Bitcoin USD risk is second nature for us. We have very advanced forecasting. We have a huge risk team that does a phenomenal job of managing this. So it's like, we're already doing this. We already have the framework and the technology to do it. Like, why not? So for us, it was, we're building a bunch of tech. This was probably one of the things that's, 95% already done. So it's like, if the pain point is, putting USD down for deposit, and miners are sitting on a, stack of Bitcoin that might not be deployed, like, why not use that for deposit and let us manage the risk?
So it's interesting that the market that we're in, and I wanted to touch, there's a lot of acronyms, there's a lot of abbreviations here in our market here in ERCOT. ERCOT is not the only market in Texas, right? Just so everybody knows, there's actually 4 ISOs here in Texas. But ERCOT is pretty unique, and we're talking about applications that can be used. An REP, a REP, an REP, retail electricity provider, is who you are required to buy power from if you're in the deregulated market, right? I see some wonderful, rep partners here in the audience as well, but I just kind of wanted to have that clarification for anybody that's listening may not be familiar, right? So what's the next step in getting Pablo on the phone and saying, hey, let's settle all of our ERCOT wholesale in BTC? What's the possibility there, Matt? What do you think?
Wow, you really put me to task here. I mean, right, for us, like, our goal with this launch is to start with the pain points of, the small miner all the way up to Eric size. And so, for BTC's collateral, that's obviously like a large step. And I think there's people in this room that are trying to solve that puzzle too, that I know. But it's daunting, right? There's a lot of risk on the table, especially when you're converting a USD obligation to BTC. So we want to be very mindful of that. So to answer your question, we're going to start small with this for the right counterparties too.
Right.
I think something that Eric touched on earlier is, I think part of the reason that people are asking for such large collateral requirements from you is they don't fully understand the risk or how to mitigate that risk. And I think that's something that Luxor understands very well. We know miners extremely well, and if you're on our pool using our firmware, we have very unique insights into that miner and have a very unique ability to manage that risk in a way that most people don't.
That's interesting. And Eric, I mean, ERCOT specifically is not the only ISO that you guys operate in, right? So, I mean,
correct. Yeah.
What are some of the other markets that you guys have operations?
We have operations in Alberta and New York.
Alberta and New York. Okay. Are you guys going to be talking, so ERCOT is a very innovative market, right? Texas, we've always been a home of innovation. The market has always led the way. The ERCOT has always led the way in being innovative, taking risks, allowing the space for innovative solutions to be tried, to be created, be tried, to fail, and to re-innovate, right? So what do we think, the future looks like in 5 years, right? Is BTC as collateral maybe going to be able to participate in other markets, say an SPP also here in Texas, or an ISO, right? Or some of these other innovative solutions. Like, how are you guys going to be speaking to market designers, regulators in these spaces, your large users? What can you guys do? What can folks here do to proliferate innovation technology, from a Bitcoin mining or a compute standpoint for these solutions from credit and counterparty risk? Kind of putting you on the spot, but I think it's going to start here in ERCOT, but it has to proliferate. Wouldn't we agree?
Yeah, 100%.
I think there's several ways where the market can develop for miners. I mean, we touched on the financial aspect with reps, but there's also a grid reliability aspect that miners can play a big part in. Most miners are running real-time, whatever load zone west is in ERCOT, and some are hedged. I would say for miners that are unhedged, running real-time, I think ERCOT needs more products for these types of flexible loads. RTCB is going to be one that is probably going to help grow this across 35 years. But understanding the true flexible nature and how they can act like a reverse peaker plant is truly valuable. And I don't think it's getting enough attention. And I think it should be going with the tide that more flexible load is going to come online. There's a bifurcation between traditional data center load that is firm versus our types of load that can be economically sensitive and turned down during times of need.
As far as programs from ERCOT goes, one of the most popular ones, ERS, right? I think you guys are both familiar with it. So emergency response services. It's one that miners are heavily participating in. There are rumors, there are whispers and conversations that this is maybe a program that's going to be unavailable to miners. My personal opinion on it is I think that's discriminatory practice. I don't think that it will actually get through. But the conversations are being had. We've already seen kind of a crushing ancillary services market. We've seen market participants leave the market here in ERCOT recently because there's just very limited revenue there. If ERS is eliminated from denied access to miners, what other solutions? I mean, you're going to have to get innovative, right? We're talking about maximizing profitability. It's a large, represents a large percentage of profitability for you guys as miners. How are we going to innovate from there? If these programs are eliminated, what's next?
Well, I mean, ERS is just one program here, right?
Sure.
And it's kind of like the entry-level program, right? Like most minimal requirements to participate in the program. So, I mean, I hope that doesn't happen.
Sure.
Obviously, like that represents a good chunk of revenue for miners, but there are other programs, and I think, if ERS goes away, for miners because of the requirements, then there's impetus to participate in the other programs. And as far as innovation goes, it's how you most effectively participate in those programs, right? Like how do you get the data to make informed decisions through a dispatch signal? How do you effectively model out what your break-even hash cost is against the program requirements, and how do you automate that in the most effective way? So that comes down to like the signals that you have that are generated, how you consume them, the miner management software that you run. I think the innovations will come in like automation and responsiveness, at least like to be most effective participation in these programs. So, like I said, I hope ERS doesn't go away, but if it does, I think it's just the impetus will be to be more effective in the other programs.
Go for it.
Yeah, and there's other markets already instituting this offer curve. Like NISO has this DER program where a load can basically tell NISO, hey, this is around when I'm not going to be profitable, $120, $150, $170 a megawatt hour. How about in exchange for me turning down, you treat me like I'm injecting electricity and pay me the market price?
And, I really appreciate you bringing that up. So that's going to be based on the market design, right? The differences between ERCOT and a NISO or an SPP or MISO or whoever. So could you maybe hit on the difference of the market designs being energy only versus capacity, and the different, flexibilities that maybe a NISO would have versus an ERCOT or vice versa?
Well, I think this is coming in ERCOT once CLR, controllable load resource, the requirements for this to be adjusted, and it does seem like it's coming down the line, hopefully within the next year, where there is going to be a similar structure to a market like NISO, where loads can participate in ancillary services, but not have the fear of being caught short, where if you're in an ancillary service and the market starts blowing out, you as a Bitcoin mine are probably already going to be offline once ERCOT calls the ancillary service. So in today's world, Hut 8 does not participate in traditional ancillary services in ERCOT. ERCOT has a $5,000 megawatt hour price cap, and if we were to participate in, for example, ECRS, non-spin, and we were in the market, if power prices start creeping up over our break even, our logical decision would be to curtail and not be upside down. However, once you're in the market for ancillary services, you are obligated to be there for the program that you have been bidded into.
And I think we're coming close, but but you talked about curtailment, like big C word, right? Everybody knows that. Everybody kind of thinks of it as binary, right? On or off, right? So, but from Luxor standpoint, with firmware, being able to kind of dial that in a little bit more, I think that's I just wanted to mention that because it's a tremendous advantage. It's not binary. It's not ones and zeros. Like you can have some more nuance into how you're managing your asset, right?
Yeah, no, the nuance is important for sure. In fact, like that's part of our pitch later today is like the days of binary mining are over, right? Like it's not an all or nothing game anymore. And so that really comes down to your question about innovation. It comes down to the technology stack that you have, and I think, I don't want to steal our CEO's glory because he's going to be talking about this in an hour, but we're going to be launching a bunch of services that, together form a tech stack that allow you to be non-binary in this and to be, more nimble and flexible when it comes to these type of things.
I think we'll wrap it up with this, just maybe from Eric's perspective, going back to diligence, going back to M&A, right? We're talking about, all of these headlines here in Texas, data centers, large loads, Senate Bill 6, all of these things are coming up. How do you guys see the Texas market over the next 2, 3, 5 years as a place to invest capital from Hut 8's perspective?
Yeah, we're not slowing down. We think ERCOT is a market we want to be in, and we are actively acquiring more assets in the region. And we believe in the state and the power market here.
Awesome. Thank you guys very much. I think that's our time. Thank you guys for being here. And again, thank you to Texas Blockchain Council for putting on this wonderful event. I think it's a great way to kick it off. It's going to be a great 2 days. Thank you guys.
Yeah, thanks, Steve.